Hi everyone, I have a simple question for you. Would you choose to invest rupees 500 rupees a month on a regular basis or save a total of rupees 6 lakhs and invest it all at once? The bigger does sound better, doesn't it? But let me show you how small consistent steps can beat one-time big efforts. In this video, we'll look into one of the best investment methods, which is the systematic investment plan or an SIP. We will also see how we can help you achieve your financial goals with ease. Now let's break it down. Now what is an SIP? An SIP stands for Systematic Investment Plan. It is a way of investing a small amount of money regularly into a mutual fund. Think of it like planting a tree. You pour water on it every day and over time it grows into something big and rewarding. To start an SIP, you don't need a lot of money. You can start small, invest regularly, and over time let the power of compounding and market growth do the magic for you. The key features of an SIP are, you can start with a minimum of rupees 500 a month. Regular investments either quarterly, monthly or even daily. And you benefit from rupee cost averaging and compounding. Now what is rupee cost averaging? When you look at any stocks chart in the markets, you will see a lot of ups and downs, which is considered as volatility. Now if you did an SIP, you have the opportunity to buy the price of a share at all the lows. When you constantly buy a share at the lows, when it eventually grows to a certain amount after many years, you have the benefit of having bought that share at a lower cost, thereby getting the benefits of rupee cost averaging. So eventually when the stock price moves up, you would have made a profit a lot bigger than a person who invested in one shot as a whole amount at the beginning of this, because they may have invested at a higher price than you have. Now let's take a simple example. Meet Ria, a 25-year-old professional who dreams of buying a house in 20 years. Instead of saving up the money and holding it as a whole, she chooses to start a 5,000 rupees SIP into a mutual fund with an average return of 12%. Now over the course of 20 years, she would have invested rupees 12 lakhs, but with the effect of compounding at the rate of 12%, the total investment would be at 49 lakhs. Now that's the power of starting early and staying consistent. Now let me give to you an important investment tip. Now if you start with an SIP of rupees 5,000 a month this year, and if your income increases in the following year by say 20%, make sure your SIP also increases by 20%. So in this case, your 5,000 rupees SIP would turn to 6,000 rupees in the following year. Now this simple strategy of increasing your SIP as your income increases, or we like to call it a step up of an SIP, can immensely grow your investments. Now to give you an example of how much of an impact a step up has in your investments, if you start an SIP of rupees 5,000 a month for the next 10 years, at an average return of 12%, you would have around 11 lakhs. Now, if you chose to do a step up each year by 10% on your 5,000 rupees SIP each year for the next 10 years, you would have around 16 lakh rupees. Now, that difference is the impact a step up of an SIP has on your investments. Now, over the course of 20-25 years, this difference would be immense. To conclude, an SIP gives you the opportunity to start small and invest regularly to beat market volatility with rupee cost averaging and harness the power of compounding for long-term growth. If you found this video useful and you want more market tips, make sure to like and subscribe to our channel.